Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As always, keep in mind there's risk involved with each trade that you take, so you want to manage risk in a way that makes sense. We do have a number of tools built into our WebTrader platform within the order window that can assist with risk management, and if we go through some trade simulations, we'll go over how those features work to make risk management quite a bit simpler for you. And those tools are good for experienced traders as well as new traders. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can access our WebTrader platform, which allows you to utilize all of the special tools, the risk management tools, as well as technical analysis and fundamental analysis tools that we offer. While trading on both MT4 and MT5 accounts from our WebTrader. So from one location, you can trade on both account types and also live and demo accounts from one location with the advanced tools. Now, if you tend to trade while you're on the go out of the house, you also have all of the same functionalities and advanced tools within AvaTrade's mobile app, which can be found in the major app stores. And you can also, from our website, follow links to the app stores as well. And so to get into the WebTrader, we just log in here in the upper right corner. And from within the WebTrader, then we can start to do our technical analysis. Now, I know that's our focus with this session, but we also can briefly talk about the fundamental news situation, because it's always nice to understand maybe which way you feel the wind is blowing, so to speak, in terms of the momentum for trading on different instruments before you start doing your technical analysis. Now, in general, what's been happening today, the volatility index has been very high, which means when volatility is high, many times that's a sign of fear on the markets, and what you can have are the equities, the stocks, indices, maybe having bearish pressure when the volatility index is up significantly, and also sometimes the safe haven assets can be attractive. Gold has been a bit bullish today as a result of the increased volatility, and we could take a look at some other instruments as well if we have time. So that's kind of the backdrop today. The US dollar has been bearish, which usually is not the case when there's a lot of volatility. Usually when there's fear on the markets, the US dollar tends to strengthen. But what we've seen today is a relatively weak US dollar against other currency pairings, along with the high volatility resulting in bearish pressure, not only on the US dollar, but also on stocks, as I mentioned, in the major indices. So that's where we're at up to this point today. Now we can take a look at what the latest signals are, if maybe the momentum is expected to change, or maybe we take a look if some of the movements still look strong enough to continue on as well. Okay, so if we then bring up some different instruments, maybe some that have signals, maybe some we'll look at instruments that maybe don't, but maybe we'll look at gold. And as we look at gold, within the signal, let's see if it agrees with the upward momentum that we've had. Yeah, the signal looks like it was on quite accurately from earlier today. Here's the pivot level within the signal, and what the pivot level is, in this case, it's a support level where the price was staying above that price level in the past, and then the prediction was that gold would rise, and it has. And the pivot level, if the movement drops below the pivot level in this case, then what they tell you is you would switch to the sell scenario, which is to look for further downside towards the red lines. Okay, so since it's a buy signal, it starts on the buy scenario, and your targets are listed as these green lines up here, the target price to take profit. So gold nearly reached the first target price just not that long ago, a few candles back, and has experienced a bit of a pullback over the last hour and a half somewhere in that time frame. And so if we expand on the gold chart, I have 30-minute candles here. We can see the uptrend. And if we want to draw the pivot line 2405 from the signal, that's right about here. Okay, 2405, almost exact. Let me see if I can draw the line. That's close enough. And so we see that this indeed was a price level that had some significance. We see from last week, the market opened this week as a gap right around this price. It kind of seesawed above and below that price for a while, and then found support this week right here at 2405, where finally it hit and went up, hit and went up, and then didn't look back. And so the pivot level then, if it drops below 2405, the expectation is it might drop further towards these prices down lower. Now, it did not do that. It went roaring up as expected in the signal and nearly hit 2434, which was the take profit suggestion. And let me just pull that down. And if we go 2334, that's here. So it reversed almost right at the first take profit suggestion. Now, if you feel like, hey, the USD has been weak today, the prediction was for gold to rise, and it did. Now it's pulled back. Maybe you see this as an opportunistic spot to buy gold because it didn't quite hit the take profit zone between these two green lines. And now you've got an opportunistic pullback if you're looking to buy on gold in this scenario. Okay. And I'm not saying that you should. The signal almost carried out to the take profit already, and perhaps the momentum has died on gold for the time being. But certainly if you were looking to try and go with this signal still, the pullback then is opportunistic. And what you could do is just take a look at the setup. And if you were thinking about buying on this with the buy signal, you could then say, okay, if I take profit up here at the first take profit suggestion, the next one was up a bit higher in that signal. So if I say 2434 as a take profit, and this is where your risk management can be very simple within our web trader, because as I put the take profit, it calculates my potential profit. And if I put my stop loss, and according to the signal, my stop loss probably should be below the pivot line, because as long as it doesn't break below there, it's still a buy signal. And if I put my stop loss, say at 2404, if it hits my stop loss, then it's a sell signal anyways at that point. And so that would be a reason why you might give up on your buy at that type of price, because the signal says if it breaks below the pivot line of 2405, then you would think about selling. So that would be a good reason maybe to give up on the buy at that point. So 2404 as a stop loss. And so you see it, while it's opportunistic that this pulled back, it's not exactly an opportunistic entry point for this signal any longer. Would have been better to get in earlier in the day. And what I mean by that is, even with the pullback, with my stop loss below the pivot line down in this area, I'm risking more than what my potential profit is. Okay, not much more. I'm risking about 7 to make 5. But you can see it's not a setup where you'd say, wow, it's a low risk, higher reward potential at this price level. Now, there were 2 take profit suggestions on that gold signal. Another one was up higher, so you could look up at maybe 2440 instead of 2434. And so you can start to adjust your prices and see how the risk management works out. And now you see, okay, it's a little better possible profit than possible loss with the setup, with my take profit up just a bit higher, more in the middle of the take profit zone rather than right at the beginning from the signal. Okay, and so your risk management is very simple to do here. Now that I have kind of my ratio set up where maybe I'm happy with the potential profit compared to the risk, I'm happy with the technical analysis of where I want to take profit and where I have my stop loss. Now I just need to adjust my trade size to have the level of possible loss that I'm comfortable with. Maybe I like the ratio maybe, but maybe I don't want to risk almost $7,000 off my account. So now I can start to adjust the trade size. If I do one lot, it immediately adjusts the calculation so I know what my possible loss is and my possible profit at the new trade size for the setup that I did, technically speaking. So I can just start to reduce trade size to where I'm comfortable. And now I can zero in, and maybe I'm comfortable risking 1% of my balance per trade, or 0.5% or 2%, whatever that is for you. This will help you determine that you're risking the amount that you want. So, with the balance I have here in my demonstration account, around 645 would be 1%. So I'm risking a little less than 1% on this move to go after close to 1% profit. Okay. And so if I'm happy with that setup, then I go ahead and I make a move. And this is in the direction of the signal. Granted, a little late getting in on this signal because it almost already carried out to the take profit and seems to be in a pullback with the momentum kind of having died out a bit. But just to demonstrate the risk management side of things, I went ahead and went in the direction of the signal since it hasn't hit, technically speaking, the take profit zone just yet. Okay. And they're not always perfect, right? They got close, and maybe that's the spot that it was going to get to before the momentum dies. Okay, so we could take a look at some other instruments as well. Maybe we switch instrument classes and go to something like the US 500 and see, well, how did the stocks do today? Now, we had Google, Alphabet, yesterday had their earnings numbers came out, and they were better than expected both on revenue and earnings per share. So certain specific stocks might be bullish today still, might be climbing, but overall, the equities, as you call them, the stocks, have been dropping with the high volatility that's been out there. And, Tesla, for example, yesterday had their earnings come out, and they exceeded expectation on the revenue, but they missed on the earnings per share, which really $500 definitely downtrending. We could take a look at the larger candles. Actually, let's look at the signal first. Then we'll look at the larger candles. The signal here was to sell. Okay, so again, the signal looks like it was a good signal, similar to the gold one, except this actually went down right clear through the take profit suggested levels, hitting both the first and second suggested take profit levels. Okay, and the take profit zone is an area where in the past there's, in this case, would be a support level or two that if it was a downtrend that was going to slow, they expected maybe in this area it could slow before potentially going further. So when they suggest the take profit zone, it doesn't mean it won't go further. It just means there are some areas of support. If it's a sell signal, areas of support where any downtrend might at least slow for a bit. And so it's an area where if you're more of a short-term trader, you might think about taking profit. So for sure, we're late on this signal. Okay, and many times this is what happens. This is an evening webinar. It's later in the day, evening my time anyways. And so many times these signals have already carried out, but at least it demonstrates for you that many of these signals can be accurate. And my suggestion always is, you see the signal, let's say you saw it earlier in the day. If it was telling me I should sell on the US 500 with the signal, before I would maybe follow that signal and actually place a trade, I might look and see, well, what's the fundamental news situation? And just as I described it when we started the webinar, it was like that earlier in the day. And so that would have supported your decision maybe to follow the signal. and then which would have been profitable here. And what I mean is, if I see a signal to sell on the US 500 and I do a quick review and I see, hey, the volatility index is up significantly, there seems to be fear on the markets, then it makes sense to me. Okay, sell on the US 500. So then if I see the signal, that gives me a couple reasons to say, okay, maybe I'll trust the signal and give it a shot. And so if you do that sort of filter within the signals as you look at them, then you can go ahead and trade on the ones that you're most confident in. Okay, so let's look at the larger candles here, maybe 4 hour, and see if we can find a support level down below if you think that this potentially could reverse back up, maybe, since it already reached the take, and there's the support level, okay? This is why the take profit zone ended at this price level. You see, this is a 1-day candle support where you see support in this area where it had trouble breaking this price zone and went back up, okay? So we're just now reaching that last area of support right here on these two wicks. The take profit zone started up here on these ones. Okay, I'll draw the second line. Take profit zone started right about there, okay, where this first line where there was support. And now the second level of the take profit from the signal was here. Okay, and we've reached through that zone and it's trying to break this support level. If this support level breaks, and it's showing signs that it could, if it breaks, the next support level is not until you get down here. Okay, you see this was an area of resistance and then broke through on this candle. So if it does drop, the next area of support in the 1-day candles is all the way down at 54.56 or so. So like another 50 full whole number points down. Okay, from 55.05 to 54.55, basically 56. Now it hasn't broken it, and it does look like it's trying to bounce a little on these candles. So if you wanted to bank on the idea that this would pull back up, then this would be an opportunistic spot from a technical analysis perspective to buy. Okay, you'd be buying in a larger downtrend that's working against you. But one thing that would be working in your favor is the US dollar has been weak today, and the US 500 is paired against the US dollar. And so maybe the initial high volatility today and the sell-off, maybe as it reached this support level, it's a spot that would make sense to buy from. Remember, this second line down here that I drew is a solid support level on the 1-day candles. And if it holds, we could see this climb back up, and let's say towards the broken support here from earlier today. This was support on the 15-minute candles, and then it plunged. So if this is going to go back up, maybe it challenges 55.43 or so back to this broken support. Many times, the more rapidly you have a drop, the more the chance of a pullback before any further dropping, okay? Not always, but many times. So let's assume we want to buy on this. I'm going to put my take profit before this resistance, this old support, which should act as resistance now. 55.40 would be just before that. So 55.40. And then my stop loss just needs to be below the 1-day candle support. So I want to get below this wick, which would be, let me drop this line up here, pull the chart up a bit, and then pull this down. Okay, so 54.97 is the bottom of that wick. So I'm going to go 54.95. Just below that support level and the lowest wick of the day today, the lowest price that it hit here. So my stop loss then is right down here. Okay. So my risk is from the current price down to my stop loss. It would have to break that big support level from the 1-day candles to hit my stop loss. I take profits up here just before that broken support, so it doesn't have to break through this resistance level. It just needs to get near it to take profit. Okay. Now the caution here is this is a simulated buy move in an overall larger downtrend. We're working against the trend of the day. And not every trader likes to do that. This is a move where maybe you're hoping that you get a bounce because it's such a nice support level from the past. Okay. So with that set up, then you look at your risk. Do I want to risk 1,400, 1,500? If not, then I go with a trade size that makes more sense to me. 0.6, I'm risking almost 600. 0.7, a little more than 1% of my balance. 0.67, should be pretty close. Okay, 636, little less than 1% of my balance to go after almost 4 times that potential profit. Okay, so a move like this, maybe you don't expect to win any better than 40% of the time because we're going against the trend. But because it's right above the support level, you don't have to risk much to get your stop loss below the support. So if you win even 1 out of 4 times on a move like this, you're basically breaking even. So if you can win 1 out of 3, 2 out of 5, overall you'll be profiting with this type of move. So you go into it understanding it's an opportunistic entry point if I get the bounce, and I only need to be right 1 out of 3 times to profit with this type of setup. So you don't expect to win more than you lose necessarily in terms of percentage wise. But in the end, what's important is, do you profit with a set of trades with this type of setup? Okay, so I would be going into this not nervous about hitting my stop loss, and knowing that if I try this 5 or 10 times, if I can win 30 to 40% of the time, I'm making a nice profit. Okay, so it's all based on the risk reward setup, and this one was very opportunistic in terms of entry point being just above the support level and having a larger distance to the first resistance, and so it's something that you can go after with less risk and more potential profit. Okay, but the downside, like I said, is we're trading against the trend, but that's what you do sometimes if you want the most opportunistic type entry points from a technical perspective. And if the fundamentals are at least 50-50 on your side, which I think they are here, US dollar's been weak today. It's not a total sell-off on the market where the fear response strengthens the US dollar rapidly. That did not happen through the day today. So if you feel like you have at least 50-50 chance or better, and you only need to win 1 out of 3 times to be an overall profit, then that's a pretty good setup, maybe statistically speaking. Okay. So some of what we went over, we're going with the fundamental headwinds, or tailwind, I should say, with the wind at our back, trying to use that as an advantage to trade in the direction that the fundamental news is maybe pushing things. And then this last example is the opposite, where we're kind of going against the bigger trend and the high volatility that hit the stock market a bit today, but maybe in a smart way from a nice support level, hoping for maybe a short-term pullback here. Okay, and this is how you can diversify your technical analysis, not always having to go with what the fundamental news is necessarily. Sometimes picking your spots where you think you've got a good chance to go in the opposite direction of what the overall trend has been. Okay, and you can find success in both ways, but it's about risk management. It's about understanding the statistics of what you expect to have happen here. I'm happy if I win, like I said, maybe 35 or 40% of the time with a move like this, with this type of setup, because it's a short stop loss and a longer take profit. And so you just go into your trades understanding that. And then you can be patient and look at the statistics over a larger number of trades. And if things work out for you, great. Okay. And if not, then you adjust a bit with your standards in terms of how certain you want to be about a trade. These are the couple trades that we started out, and we could close now with a small profit, be up $50 or so when you put the two together. But that's moving quickly, and what we want to do is probably be patient, see if our trades carry out. But when you're trading off of a bounce, off of a support level, or trading in the direction of the momentum as it's currently moving, both of those types of trades can move trades into profit pretty quick. And it's good for scalping type strategies where you get out before it has a chance to end the bounce, in this case off that support level, or end the momentum in the case of trending in the same direction. Okay, any questions, comments before maybe we look at one more chart? And if I see any questions pop up, I'll address them. One thing I like to do sometimes is, from a technical layout, compare how some instruments are related to each other. So if we do the multi-chart view, and you get to that here, you can do up to 4 charts at once. I chose the dual layout. And it's interesting sometimes to see the correlation between different instruments. And so one thing I was watching today, sometimes guides my trading, was gold and the US dollar index. Let's see here. Just 1 minute. Apologies. And let's just take a look. If I'm typing the wrong call name, sometimes that happens. Let me look at indices. We'll see if the US dollar index, okay, it starts dollar. So let's go here. It could be I need to be on the MT5 platform. No, there it is. Okay. Dollar index. Okay, so the dollar index is an index or a group of different instruments that all are paired against the US dollar. So you've got one of the heavy ones in the basket, so to speak, is the Euro USD, but you also have GBP USD, USD JPY, USD Swiss franc, etc. And so all of those with their weighted averages are put together to create the movement price of this index. And so you can get a good idea of the strength of the US dollar overall, not just against one pairing, by looking at the US dollar index. You can trade on it, or you can help use it to help you guide your decisions on things. And so let's go back to gold on this one. And so if we take a look at, let's say, the same candle levels, 1 hour candles versus 1 hour candles, what we can see many times is that this instrument, these two tend to move opposite of each other in a general sense. As the US dollar is strengthening and going up, gold tends to go down, and vice versa. As the US dollar is weakening and dropping, gold tends to go up. And so we can just use these last 2 green candles as an example. We see 2 green candles of the US dollar index climbing, and what did the last 2 candles of gold do? They went down. Prior to that, there were 1, 2, 3, 4, 5, 6 candles where the US dollar index went up, gold went up. 1, 2, 3, 4, 5, 6 candles where gold went up, and you can see that's where US dollar index went down for 1, 2, 3, 4, 5, 6 candles. Okay, so these 2 candles, dollar index up, gold down. These candles, dollar index dropped, gold went up. Okay, so you can get an idea that these tend to track in opposite directions. All right, and sometimes you'll see they end up in the same direction, and you might expect that they will eventually move opposite of each other if that's what they tend to do over time. Okay, so I noticed earlier today that the dollar index, if we go to 4 hour candles, Okay, there was a spot in time where the U.S. dollar index had shown quite a bit of dropping, and gold also had dropped quite a bit on one of the 4-hour candles, and that was earlier in the day. And so it was a spot where you could expect that then gold might go the opposite direction at that point, because if they're not moving at the same time in opposite directions, if they for a moment stay in the same direction, you expect them to, like polar opposites, move apart much of the time. And so it's interesting to try and follow these trends between different instruments. And another example would be if you're looking at something like the Australian dollar, Japanese yen, next to a chart of one of the indices out of China. Why would I say that? There's a phrase many times that traders use: as China goes, so goes the Australian dollar. Now, it's not always, but you can find a relationship between the Chinese economy and the view of how it's doing and the strength of the Australian dollar, okay, and also the yen. So, and I can just kind of explain that a bit. If I'm looking at a chart of a major index out of China and it's gone up, I don't know, significantly during the day, a couple percentage points or something, some big move up, showing positive momentum. Well, China buys a lot of exports from Australia in terms of commodities. Australia is a big exporter of iron ore for making steel and different products that China tends to buy from the markets. And so if China's doing very well, then that creates bullish optimism for the Australian economy and the Australian dollar. And the opposite, if China's doing bad, that creates maybe negative bearish pressure on the Australian dollar. And so why pair the Australian dollar against the yen? Because the yen is a safe haven currency and tends to strengthen when there's fear, the opposite of what the Australian dollar does when there's economic fear. It weakens. And vice versa, if things are great out of China and there's not economic fear and the Australian dollar is strengthening, that tends to be when a safe haven currency like the yen weakens. So you get good price action with that pairing, where one tends to strengthen while the other weakens with the Australian JPY pairing. And so if I have a chart on this side with the China 50 and on this side with the Australian JPY, if I see the China 50 went running up the last couple hours and the Australian JPY pulled back a bit, if they tend to move the same direction most of the time, that might be a key that perhaps the Australian dollar is due to climb if something that tends to move in the same direction as it already made a big move. Okay, and so it was similar like that with gold today and the dollar index. They kept following each other, but not necessarily at the same time. So you get some indication there sometimes from one instrument on directionality that you might expect based on the movement of another instrument that tends to be correlated with it. Okay, sometimes it's correlations in the same direction, or it could be correlations in the opposite direction. In the case of the dollar index and gold, they tend to go opposite direction many times. And in the case of a major index out of China and the Australian JPY, they tend to go the same direction. Okay, it's not always the case. There are other factors that can cause that not to maintain that relationship, but it's just an example or two of how you can start to use technical analysis to then zero in on even smaller time frames. If I'm looking at 5-minute candles and I look at the dollar index and I say, okay, US dollar index is down over the last 30 minutes. Look at these 5-minute candles, and gold is up. Okay, that's what we expect, right? We expect weakening US dollar. I'm sorry, we expect strengthening US dollar. I mixed up which side I was on. US dollar up, gold down. Okay, last 30 minutes or so, US dollar index up, gold dropped down against the strengthening USD. That's the relationship we tend to see. If, let's say, the US dollar index pulled back down strongly, we saw a weakening US dollar, but gold didn't go up yet, you might expect then gold to be able to climb easier if the US dollar index came flying down, okay? Or the opposite. If we see gold go flying up and reach a resistance level, but the US dollar is still strengthening on the dollar index, you might expect then that gold might pull back down off that resistance rather than breaking it if the US dollar is rapidly strengthening after gold reached a resistance. Then you might feel safer selling against a strengthening US dollar, which it looks like that's what's happening right now. The US dollar index is climbing, but this is not an opportunistic entry point because gold already dropped, which we would expect. But if gold was up here and this was climbing like it is, then you might be thinking about selling on gold based on this relationship, okay? And again, it's not going to work every time, and it doesn't always trend in that type of relationship, but there is a relationship there. There is some correlation because what is gold paired against? The US dollar. So if the US dollar rapidly strengthens on the dollar index chart, you might expect gold could pull down then against the US dollar eventually, okay? All right, so just some ideas about correlations between technical analysis on charts or instruments that can be related to each other. Any questions, comments before we end things in this session? Okay, and each of the sessions is recorded, so if you think of something that you wanted to ask about what we covered and you missed it, you can always watch the recordings on our YouTube channel. By tomorrow, this one should be uploaded to our YouTube channel pretty much by the next business day morning, at least by mid to late morning. The prior days webinars are uploaded, and that isn't just my sessions, but all of our presenters that do webinars through the week, you will find on our YouTube channel. Okay. All right, everybody. Thank you for joining, and good luck with your trading. Bye for now.